As the year comes to a close, the red-hot housing market has been brought to its knees by soaring mortgage interest rates. What a difference a few months can make. It is no secret that the housing market has drastically changed and swung from an extreme seller's market into a buyer's market. And although many buyers feel that buying a home in a buyer's market allows them the opportunity to get the best deal, our current housing situation seems to be at a standstill. Here in the Phoenix market, we have seen our home price appreciation drop by about 1.6% every month since May. Yet we are still seeing about a 9% overall year-over-year appreciation. With interest rates rising, more and more buyers simply can't afford to buy, even though home prices have come down. And sellers, who are typically also buyers, don't want to sell and get rid of their low mortgage payment. This is where we get the standstill. So where do we go from here? Will interest rates continue to rise? Will home prices continue to go down? When will buyers return to the market? And what are experts saying about the next few years for the housing market? Now, make sure you stick around to the end because I'm going to talk about something that is not in every headline. It is not something people are talking about, but it is something everyone should be paying attention to. Now, because many believe that home prices are going to continue to go down, buyers simply don't feel motivated to buy, but it goes even further than price. At the beginning of the year, you could have gotten a mortgage for right around 3%. Now, we're around 7%. This is quite a big jump in a short period of time. And this jump translates into mortgage payments rising by hundreds of dollars every month. So even with home prices coming down, these interest rates rising made homes that were already on the cusp of affordability that much further out of reach. And this is really purely due to the interest rate and how much higher the monthly mortgage payment would be. For those still looking and wanting to purchase a home, this is forcing them into making sacrifices on the size of the home, the price point of the home, and so many other things. So how low will prices go? So many of the analysts are predicting two different sets of numbers. One, if we stay like this, and two, if we go into a recession, which I'm not quite sure how we're not already in a recession, but that's for another time. Mark Zandi of Moody's Analytics expects home prices nationally to fall by 10%, peak to trough, bottoming out in the summer of 2023. He believes they will go down even further in the pandemic hotspots such as Phoenix, Boise, Idaho, and Austin, Texas. He believes prices in these locations could drop as much as 20%. He said this: the markets that got most juiced up during the COVID-19 pandemic are the markets that are going to experience the biggest declines going forward. Now, I've had a few people comment on my channel about prices needing to go back down to where they were in 2019, and I wanted to talk about that and give it a little perspective as we talk about prices coming down. So nationally, home prices rose by about 40.6% over the last 2 years. And here in the Phoenix market, we saw our home prices increase by about 57%. So although 10, 15, 20% price declines sound great, this does not even get us close to 2019 pricing. Ali Wolf of Zandi said this: a really important thing to remember is housing is cyclical. We came from a massive run-up in prices, sales, demand in the housing market, and now it's contracting. This is not new. So what about the interest rates? Well, we saw what happened over the last 2 weeks. Things can change drastically. As the new inflationary numbers came out, showing a hint of slowing, which in turn helped the mortgage interest rates, and they actually came down. Now, because of the inflationary numbers coming down slightly, this could affect what the Fed does when they meet again in December, but no one really knows what's going to happen, so we just have to wait and see on that one. As far as interest rates, most experts are saying that they are going to stay high for the rest of the year, with some saying that we will start to see them come down at the end of the first quarter, beginning of the second quarter of 2023. Now, we all know that the interest rates are the main driver keeping buyers away from buying right now. Once that rate comes back into the fives, we know buyers will come off the fence and begin to start their buying process again. We have already seen this happen in July of this month, so we know there is pent-up demand from buyers out there. Ali Wolf said this: we're living through a really unique time in the housing market because we have both a buyer strike and a seller strike happening at the same time. When you have both of those things happening, home sales will inevitably come down. Builders are also pulling way back because of the slowing in the market. They already have some unsold inventory that they need to get off their books and do not want a repeat of the 2008 housing crisis. The problem with this is the housing shortage that we still have nationally, and in some areas, it is worse than others. And in the Phoenix market, we continually have people moving here. And with the continued expansion of jobs across the state, it does not look like it's going to slow down anytime soon. Now, as I mentioned at the beginning of the video, the media is really focusing their attention on the lack of demand, but not many are talking about how low our supply is. When we look at new listings being put into the MLS, we are seeing a really big drop-off in the numbers. In November, we can expect something around 4,250 new listings is normal, but so far we have almost 1,500 less on the market this year. Just to show you how drastic this is, take a look at the same month back in 2005. When we also experienced a rapid cooling of demand during the second half of the year. This brought on a lot of listings from people trying to sell their homes before prices fell. There were large numbers of empty homes that had been purchased for speculative reasons. The situation now is completely different. Many owners now live in their home and don't want to exchange a low mortgage payment with a high mortgage payment just because of interest rates. We have a number of cities here in the Phoenix market that are seeing a drastic drop-off in the number of homes currently on the market for sale. Phoenix is down 43%, Scottsdale is down 35%, Gilbert is down 41%, and Chandler is down 47%, and that's not all of them. With such a shortage in inventory, the downward pressure on pricing is weakening. Mark Zandi said this, "Prices will come down, but they're not going to collapse because there is a shortage of homes. That will help ensure the market doesn't collapse." The bright spot of a recession, once everyone agrees that we're in a recession, is that during a downturn, historically, interest rates come down. This, combined with lower home prices, will help buyers jump back into the market. Padraig Garvey, regional head of ING, said this, "This is still a pretty strong economy. There is a recession risk, but we don't have the ingredients there for the housing market to crash. Prices won't collapse off a cliff." The one thing we need to watch out for right now are our inventory levels. If they remain this low when interest rates come back down, if we don't have additional inventory come to the market, we could end up right back where we were with a housing shortage. As a buyer, it is important to keep your eye on those interest rates right now. Oftentimes, sellers don't know when they're bouncing around as often as buyers do. And as prices come down and interest rates come down, this could be your opportunity. And one of the first places that I would look are the iBuyers. If you'd like to learn more about how they are affecting our prices in the overall Arizona market, take a look at this video right here. If I can answer any questions for you, please feel free to reach out. As always, I thank you for watching, and I'll see you next time.